Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. I'm just going to go ahead and review the stock markets, basically the index, talk about some crude oil futures, and talk about the currency pairs as well. So without any further delay, let's go ahead and review the overall markets and the macroeconomics. Alright, as you guys can go ahead and see, the dollar index has continued going lower. This is kind of what I was expecting out of the dollar index, as I am not surprised. We continue our war efforts in the Middle East. Obama has come out and said that he's going to address some of what people are saying, stuff like, oh, I'm going to talk about how we're going to get rid of Gaddafi and realize that military force is not going to be the only thing that's necessary. But in reality, it doesn't change the fact that they're bombing tanks, blowing up stuff, keeping money from going to Gaddafi and a bunch of other stuff. Or not really Gaddafi, I forgot who the Libyan leader is. I believe it's Gaddafi. Yeah, it's Gaddafi. I was thinking I was saying Mubarak. But pretty much Gaddafi is stuck in a corner at this point, and the rebels are finally taking the upper hand in this whole entire battle. So fortunately, we won't have to see another Iraq-like war. Troops get dropped down and spend even more ridiculous amounts of money. But pretty much what we're going to have to see is the end of permanent open market operations. Now, I'm not exactly going to talk about whether permanent open market operations is ethical, the fact that they continue inflating the economy and stuff with free money. You know what? I'm not really here to talk about ethics. But what I am going to say is that for as long as permanent open market operations is active, chances are you're going to see the dollar continue to go down in value. Likewise, the corresponding currencies will continue going up in value. That being said, I want you guys to realize that POMO and our war efforts outside of the United States, particularly in Iraq and Afghanistan, have to come to an end for this inflation to come under control. So that's pretty much what I want to talk about with the dollar index. I do believe it will continue going lower, and just don't be surprised. I mean, we still got a weekly and monthly trade triangle pointing towards the negative, and the downtrend is mainly still in effect with a negative 85 score. Moving on, I want you guys to go ahead and look at the Treasury bond market. Treasury bond market did work in inverse correlation to the dollar index, as you guys can go ahead and see on the 5-minute chart. You guys, it's not really surprising. I mean, what could we honestly expect? I mean, this is the bond market futures, and the bond market futures, initially they were positive towards the end of the day because the stock markets were relatively negative, but already we're seeing an inverse right here. We're seeing the inverse correlation come in play. Stock futures are pretty positive right now, and I'll go ahead and show that to you guys a little later on. But bonds are pretty weak right now. They continue going a little lower, and just trade it as you see it. We saw a break below the flag pattern on the day's trading, and the bond market will continue going lower as the stocks continue going higher. Not to mention, if you guys go ahead and look at the dollar index, and all of this is trading actively right now, so don't take it personally, but I do think that that the dollar index is a very key point and clear, and it's making a very clear point that we are going to most likely go higher on the day's trading session, at least for the stocks. Dollar index will probably continue going lower as the Federal Reserve keeps on printing free money into the economy. So that's pretty much what I want you guys to expect on Tuesday's trading session, a flat to positive day. No surprises there. That's just my market forecast. Just like you get a weather forecast, I guess you guys could get a market forecast. I also want to go ahead and talk about the US dollar Japanese yen pair. And the US dollar is continuing to gain strength. We did have a double bottom right here, and we have been able to bounce off of it and go higher. So nothing out of the ordinary there either. I do want to point out though that this has been a bottom before, and we've been able to find some support on it. We've been able to continue going higher, and that's pretty much all that really matters at this point. I believe that the U.S. dollar will continue gaining strength as things in Japan do get contained. Just recently, we had an issue in Japan as far as the nuclear power plant is concerned, and they were talking about radioactive levels getting higher. It's getting hard to get electricity to the plant. The actual uranium or whatever compound it is. I don't really know the name of it. Besides, this is completely over my head. I'm a finance geek. I'm not a science nerd. But basically, they're saying that they have these compounds that are dangerous but don't go in the air. So the issue right now is that they have to figure out a way to contain all of these issues before they get out of hand, and they're still not out of hand yet, but there's still some risk associated with Japan. Earlier, the Nikkei traded -4%, but they were able to climb back up from the abyss, and I think that's the most I'll ever see the Nikkei go down for quite a while. I do believe that once the dust settles, eventually the Nikkei will get back to its original levels and continue going on higher as the global economy recovers, as every central bank keeps on pumping in free money into the economy. It's not just the Federal Reserve, guys. It's the European Central Bank. They're all drinking the same Kool-Aid. It doesn't matter what part of the globe you're in. It doesn't matter. Aside from the People's Republic of China, their issue is that there's too much free money coming in. There's too much inflation, too much money just being created. Because of excessive amount of lending, scrupulous loans and stuff like that. And that's China's issue. But no other country in the G7 has the luxury, aside from India and China, has the luxury of saying, hey, our biggest issue right now is that our economy is growing so fast we have to contain it. Absolutely not. The only countries that have that a problem are basically India and China, and every other country is drinking the same Kool-Aid. They just keep on pumping free money into the economy. So just don't be surprised as the global economy recovers. It's partially going to be fake, partially real. Again, I'm not here to discuss ethics. I'm just here to talk about what's actually happening. Moving on, I do believe that the US dollar will continue gaining strength against the Japanese yen because of central bank intervention. Yeah, so just keep this total, over the long term, just keep this mindset that there's going to be an upside bias in the U.S. dollar Japanese yen. Following that, I do want to talk about the Euro US dollar. And I was talking about this, I believe, in one of my earlier videos. And basically, I had a pretty positive bias, and it wasn't in my earlier videos. Actually, it was, in fact, a Facebook post. And basically, I was anticipating a double bottom pattern, in fact, to play out and go in the opposite direction. We had it right here. We were able to manage to get down there, but we weren't able to break it. So I thought, hey, maybe we are able to find some support here. Just perhaps maybe we could bounce off of this, eventually go higher. And pretty much that's kind of what we got. Yeah, it wasn't exactly here. It's actually not this one. See, but this is what I was focusing on Friday, right here. And pretty much the double bottom did work out, and it did go a little higher. But what I do want to focus on right now is the fact that if you just pull back a little bit and you just draw on some trend lines, you can just see that the Euro US dollar is going to most likely continue going higher. And the main reason is that the European Central Bank has more issues with deflation than we do. Their economies are a little more stagnant. Their taxes are a bit over excessive. And if you guys heard over the weekend, people were protesting about what the UK government is doing. UK were protesting. You saw people busting the fronts of Lloyd Bank and Banco Santander. And Banco Santander is a bank that I truly and dearly love. I've made some great calls in it, and I've had some great stuff happen with it. But yeah, they had a lot of issues. There were, people were just rioting in the street and stuff. And what you're basically seeing in the UK and every other EU state right now is that they're really trying to rein in the budget deficit so that they in turn can lower taxes and make the European Union more competitive in the global marketplace. And that's partially the reason why the euro is so over or so valued so much higher than the US dollar. It's because they have issues with deflation and their ability to compete with global markets. Moving on, I want to go ahead and talk about the crude oil E-minis. Now, the crude oil E-minis, I did want to point out a key fact. Factually speaking, we are at a huge surplus of crude oil supplies. And what do we get when we have a surplus of crude oil supplies? Well, basically what happens is that we have around 3 million, and this is a statement made by OPEC, that we have a 3 million barrels surplus of oil supplies. Now, that has been more on record than ever before. Basically speaking, the fear in Libya, the whole entire Middle East thing is a bit overblown at this point. I think people are going to start realizing that fundamentally we are at a huge supply surplus and nowhere near a budget or a deficit of crude oil supplies. We have so much in storage. We are producing so much more than we ever need. So you guys, I want you guys to know that crude oil prices will eventually come down, at least in the short and midterm. And the only thing that will probably drive demand is demand coming out of China and India. But that's going to be playing out in the coming years ahead. Maybe by the end of the year, we'll probably see a huge more demand coming out of China. But I just want to point out the fact that I think the prices are a bit overdone. Earlier, I know I said in a video that chances are they probably could go higher based on what we're seeing in Japan, but Japan does produce most of its energy through hydrogen technology, basically water, and nuclear technology, and some coal, but not much from crude oil. So, I just want to make a correction there. Yes, I do know for a fact that crude oil will most likely go down because the hype is just hype. Alright, moving on, I do want to point out that Chevron is probably going to continue this negative momentum. As you guys have seen, Chevron has had a wonderful time. I mean, it's been able to break an ascending triangle pattern before. As you guys can go ahead and see right here, that's an ascending triangle pattern that has been broken. But I don't really see much from Chevron anymore because, earnings are based highly on whether or not oil prices go up or down. And right now I have a downside bias for crude oil, so likewise I don't see much of a move coming out of Chevron. Likewise, the same thing goes for ExxonMobil. ExxonMobil is having a negative day, and I'm anticipating more of that coming out of Exxon. Well, that does it for me for that does it for me for today. If you guys have any questions, leave them down below the video. And just be sure to go ahead and subscribe if you guys want more of this. And I guess if you guys want to use the same charting software that I use, please be sure to go ahead and check out the link below. Take care, folks.